Hi, I'm Greer and welcome to this week's market recap for Term 3, Week 9. This week, the Reserve Bank sees the wage growth hitting the fastest pace in years by 2023. As the economy recovers from COVID, the Reserve Bank says the wage growth could pick up to its highest pace in years. The RBA released its quarterly forecast last week and suggested Australia's economy was showing strong recovery signs. And if the momentum continues, we could see employment growing faster, driving unemployment down even faster. The RBA states wage growth could continue to pick up in the near term as the remaining wage freezes and cuts implemented by 2020 are unwound and the labour market conditions tighten. The Growth in Wage Price Index, WPI, is anticipated to pick up above 2% by the end of 2021 to be back in line with the pre-pandemic level of 2 to 2.5%. It's then forecasted to strengthen further as the unemployment rate approaches 4% to be around 3% by the end of 2023, the fastest pace since 2013. This would be a drastic change from current dynamics as currently 50% of jobs are experiencing little to no wage growth. This is because many firms are currently experiencing difficulties finding labor and are trying to attract and retain employees by using other strategies other than increasing wages, such as paying targeted sign-on, retention bonuses, providing more internal training, etc. RBA expects employment, wages, and inflation to pick up faster than expected over the next 24 months, meaning bond traders will continue to pressure the RBA to lift its inter-rate target much earlier than 2024. Also this week, lockdowns have mostly ended, but the scarcity of international students is impacting Australian businesses. The federal budget projects COVID border closures caused the first fall in migration since 1946, exacerbating Australia's existing labour shortages. The number of international students dropped from 756,000 in 2019 to 552,000 in August 2021, meaning casual staff usually working for smaller businesses have been absorbed by other industries such as manufacturing and agriculture. One industry in high demand has been the delivery network, which has been overwhelmed in recent months by the increased demand brought by the COVID lockdowns. Casualized industries such as hospitality and retail have been heavily relying on international students and temporary visa holders for many years. And because of the lockdown and border restrictions, and consumers are eager to spend, many of these businesses will now experience a labor shortage. This week, the ASX jumps to a 7-week high. Australian shares lifted to the highest level since mid-September, with the US Federal Reserve signaling it was in no hurry to lift interest rates, and the Bank of England left its benchmark rate at a record low. The ASX 200 finished 0.3% higher. The benchmark jumped 3.1% in the past 5 days, marking its best weekly performance since late May. Westpac's share price has fallen to the ninth-month low, shedding another 2.8% and was the only Big Four bank which closed in red. Its shares plunged 12.2%, meaning it's no longer Australia's second most valuable bank and now trails behind Commonwealth Bank and NAB. Westpac's shares were dumped after it reported big cuts in margins, high expenses, and full-year results which missed market expectations. Also, Australia's largest lender, Commonwealth Bank, has raised its fixed-rate mortgages to 0.5%, and Westpac lifted its rates to 0.21%. This comes as market interest rates have been rising sharply on expectations of higher inflation and sooner than expected rate hikes. And that's all for this week's market recap. Have a good week.